to our next, I guess, traumatic thing that's happening. The banks, financial instability and bank failures. Now this last, but you know that Silicon Valley Bank, that bank was not, they said it was like only 25% of their clients was FDI insured. Only 25% of, I guess, their monies FDI insured. So the other 75, I guess they lost their money, which would totally suck. I saw a commercial. I don't know if it was Chase Bank or Square Bank or one of these banks. It was a smaller, I said Chase, but it was a smaller bank, and they had a commercial. We're FDI insured. Bank with us. Because, you know, if you're not FDI insured, if you have monies in the bank and they're not FDI insured, if that bank goes under, you basically lost your money. You know? So y'all might want to check to see if your bank is FDI insured, because that will be horrific. You got all these middle class people got their money in the bank and they're not FDI insured. So that's what we're looking at now. Let me widen this screen up a little bit. This is European Bank. I don't want to show you guys that. I want you to look at this one. They said stocks declined broadly after the First Republican cuts dividend. And the reason why they cut the dividend is because they're looking to get bailed out. First Republican Bank or First Republic Bank. And their shares plunged. So they said Silicon Valley Bank files for Chapter 11 bankruptcy protection. And they said $30 billion of deposit influx from the biggest U.S. banks fails to calm jittery investors. You know, First Republic Bank dropped 32%. Shares fell more than 30% today after a multi-billion-dollar rescue deal orchestrated by the biggest U.S. banks failed to convince investors that the troubled lender is on solid footing. The move erased the gains that came Thursday when a group of banks, including J.P. Morgan and Chase, Citigroup, Bank of America, Wells Fargo, deposited $30 billion in First Republic in an effort to restore confidence in the banking system, badly battered by a pair of bank failures. I mean, 32%. Just imagine your stock declining 32%. It's not clear whether it's viable as a standalone entity. Global bank analyst at Boston-based Loomis Sales and Company, I guess this is Julian Wellesley. I don't know how you pronounce that name. So it's likely, in my view, to be taken over. So eventually they're probably going to get bought out or swallowed up by a bigger bank. And they declined. First Republic declined to make any comment. In a regulatory filing Thursday, the bank said deposit outflows had slowed significantly. The rescue deal it said was a vote of confidence for the First Republic in the entire U.S. banking system. The sudden collapse of recently Silicon Bank and Signature Bank, the second and the third largest bank failures in U.S. history, have sparked concerns that anxious customers could drain deposits from other small and mid-sized banks. That is true. Because when you have a smaller bank and you're not FDI insured, where's your money? You're not going to be able to get your money. So I'm going to pull my money out and go to Chase Bank or Bank of America or something like that. So, this is kind of have a ripple effect on the global financial market, on the stocks. They said the S&P 500 closed today at down by 1.1%. NASDAQ closed about down by 1%, and the Dow Jones 1.2%. Bitcoin, Bitcoin went up though. Bitcoin is up to 26,000. I got some money in Bitcoin still, and it went up about 26,000. So it was up by 5%. And they said it's the highest level it's been in 11 months. So, when the dollar goes down, they have the adverse effects. It's adverse proportionate. I forget what the math term is, but y'all know what it is, the opposite. If the money's declining, the bank is declining, like stocks are declining, for some reason, crypto is going up. So, and people are probably like, oh, fiat money is not the thing anymore. Pull out money out the fiat currency and make it into Bitcoin, cryptocurrency. I mean, and then now you're going to have all these crypto gurus on the internet saying, oh, purchase Bitcoin. Now everybody gets excited. Look, don't go getting too excited like they was doing during the pandemic, is talking about purchase cryptocurrency. I think you are always supposed to look to see, actually learn about cryptocurrency before you start putting your dollars into crypto. Anyway, but mark my word, we're going to have a bunch of gurus talking about, oh, invest in crypto because the stock went up. But that's not literally how it goes, Learn about it before you start putting your money into it. So First Republican stock had lost nearly 70% of its value over the past week. That's crazy. Investors are especially concerned about the San Francisco-based lender because it caters to wealthy customers with large account balances that aren't backed by FDIC. They cap it too at $250,000. So if I don't know if you got more than $250,000 in the bank. If you do, that's just ridiculous. You need to find some type of assets to put your money in. You should never be carrying more than $250,000. I mean, if you're a normal person. Now, if you like a multimillionaire, if you're listening to this channel, you probably spend more money or your living expenses is higher. But anyone that's got $250,000 just sitting in cash in the bank, I wouldn't suggest that. I'll put my money into some type of asset, because the value of money is decreasing daily. That's not going to change. It don't matter if the market goes up or down. Your money has less buying power today as it did yesterday. That's just pure facts. You could check the CPI index. And over time, that's just because inflation over time, or the CPI over time, it increased by 3% or whatever. So you don't have more than $250,000 sitting in the bank. Okay, so enough of that rant. So that's the cap of the FDI insurance, okay? It says analysts at Jefferies estimate that as much as $89 billion in deposits have left the bank over the past week. The bank has borrowed tens of billions of dollars from the Federal Reserve and Federal Home Loan Bank to plug the hole. Bank stocks took the worst beating, and NASDAQ index, the KBW NASDAQ index of commercial banks, and the SPDR, S&P Regional Banking ETF, each fell more than 5%. And it's the lowest level it's been since 2020. Okay, so the rescue deal offered the First Republican to temporary lifeline. And it's trying to shift the balance sheets along with an announce of dividend suspension. So they're not paying out these CEOs. JP Morgan analysts sounded a more positive note, calling First Republican a higher risk, potentially very high reward name. That's what these banks do. They're gonna I think it's put a short on their stock, because if they save the bank from tanking, and they stock shoot up, they'll make a whole bunch of money off of it by putting a stock or shorting a stock. I guess it's shorting if it goes up. The significance of these shifts in the bank sheet, along to announce the dividend suspension, paints a grim outlook for both the company and shareholders. So U.S. Bancorp has its worst week ever since 2009. The shares was down 19%. KeyCorp dropped by 25%. You got all these banks going down the drain. Even the biggest banks shed some billions of dollars in market value, with Citigroup nearly down 9% a week ago. Still, executives says that they are seeing the levels of depository panic and claim that the SVB, Silicon Valley Bank, and Signature panic that the claim. Okay, so they're saying that that's just a one-off. These banks having hard times or collapsing. We don't know. We don't know it's one-off. You know, they was printing money like crazy. Printing money like crazy. Now people pulling out their money for some odd reason. We don't know if it's one-off. And why, you know, so I don't know. They're saying it's a one-off, but we don't know that until it's done. Let's see if we need to read any more of this. I don't think so. Y'all see, now you can see how bad the stocks failed. You see this is First Republican in the negative. Share price change, they said negative 75%. That's just ridiculous. Let's take a look at this video.
Dad, we got this.
And I'm not going to play this advertisement because, of course, they're going to... Well, you know what? I was about to say I'm not going to play the advertisement because they're going to demonetize me. They demonetized my channel. So any support will help you guys if you want to support the channel. You could super chat it or you could put it in my Cash App. I think my Cash App is linked in my description section. If not, I'll do it on my next video. Oh, here we go.
No way.
The series of events that followed the bank failure roiled global markets, sparked federal investigations, and is forcing the Federal Reserve to rethink the next steps in its inflation fight. WSJ Markets reporter Gunjan Banerjee explains how the week unfolded. As worries of bank runs spread on Sunday, federal regulators took control of a second bank, Signature, making it the third largest U.S. bank failure ever, after Washington Mutual and SVB. Regulators said customers of both banks would be able to get all of their money back.
We are concerned about depositors and are focused on trying to meet their needs.
They were trying to bring stability to the financial system at a time when people were worried about, will these bank failures ripple throughout the entire U.S. economy?
Regulators created a new lending program for banks called the Bank Term Funding Program, which allows banks to take advances from the Fed to meet customer withdrawals.
We saw the stock market, stock futures rise on Sunday, but a lot of that enthusiasm quickly disappeared Monday morning.
President Biden sought to restore confidence in the financial system during a televised address before U.S. markets opened.
Thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe.
Shares of First Republic Bank plunged, and
every time I watch Biden, I'll be like, oh my God, I hope he makes sense.
other regional bank stocks suffered their largest decline in 3 years as Wall Street scrambled to assess the likelihood of further fallout.
People were worried, will the stress that we saw at Silicon Valley Bank or Signature Bank, will that spread to other regional banks?
On Tuesday, the Labor Department's Consumer Price Index showed that inflation eased in February, but still remained high at 6%. This underscored the challenges facing the Fed as it balances stabilizing the banking industry while also fighting rising prices. The same day, the Wall Street Journal reported that the Justice Department and the Securities and Exchange Commission are investigating the collapse of SVB in separate probes.
One thing in particular that they're looking at is executive stock sales ahead of the bank failure.
Swiss bank Credit Suisse and other European banks saw its shares hit lows on Wednesday as worries about the financial system spread across the Atlantic.
So now people are wondering, how bad is this going to get? Is it going to spread across the globe? And that was really the worry throughout the week.
In the U.S., First Republic stock tumbled as well as its credit rating when S&P Global Ratings downgraded it to junk status, citing its elevated risk of deposit outflows and profitability measures. After Credit Suisse said it would borrow up to $53 billion from the Swiss Central Bank to shore up its liquidity, shares of the troubled bank rose on Thursday. First Republic shares also turned positive as 11 banks swooped in to rescue the beleaguered lender with a $30 billion financial lifeline.
They don't want...
Did you hear that, you guys? They said the First Republican credit rating went to junk status. Dang, that's just... I mean, you got so many levels before you go to junk status. I mean, that's like the bottom, like you're not even worth anything. That's just crazy.
First Republic's pain to spread to the broader economy, to spread throughout the entire financial system, because that's not good for JP Morgan. That's not good for Bank of America. And it may not be good for U.S. consumers.
Treasury Secretary Janet Yellen, who was in discussion with bank executives about that deal, told lawmakers that the U.S. financial system remains healthy.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them.
On Friday, Silicon Valley Bank's parent company filed for bankruptcy, the largest stemming from a bank failure since Washington Mutual in 2008.
Now there's going to be a court-supervised process to find owners of the parts of SVB Financial's business that aren't Silicon Valley Bank, since Silicon Valley Bank is already under federal control.
Questions hung over the economic outlook before SVB failed. Now, volatility at other lenders is testing banking, business, and consumer confidence.
People were so worried about a recession going into this year. People have been wondering what's going to crack as the Federal Reserve starts raising interest rates. But I can tell you, no one saw this coming.
I wanted you guys to look at this. I found this junk status thing, or rating. Look at this. This is by Moody and Fitch. Well, Standard and Poor's issue credit ratings for banks, along with other financial institutions. So you got the AAA. AAA rating means like you will never default, highest quality, lowest risk. Who will have a AAA rating? Probably Chase Bank, Bank of America. You know, they probably have those good ratings. When you get into the B and the C status, those are probably poor banks. They probably got one or two really small banks, higher risk, very speculative type banks. You do even have some smaller banks with the B status or double B or triple B status. But when you get into the D status, and that's what they call the junk status, that means you're going to default on your obligations. And you're more likely to do so. There's a few black-owned banks they got these D's and C status. And when I say few of them, probably all of them. I think Independence Bank is probably like a B. But you know, they not, since they're smaller banks, none of them reach these AAA, AA, or A status. And it's very rare where you see a AAA status bank or financial institution. It's very rare that you will see that. I mean, those are like the really large, probably world type banks. So now that we learned our rating status, you could thank me later. So that's interesting to see that now they got this federal program that they could just go and ask, and you probably really won't know about it until some investigative reporter said, hey, they asked from the some money from the Federal Reserve to pay off these deposits to their customers. You know, so you would probably never know that unless somebody reported, because now it's not a big thing. They don't have to actually have a Congress meeting about it. Since 2008, they probably put that in place. Since the last crazy economy wipeout that we had. So this last graph that I want you guys to look at, this is just world type banks or European banks stocks, and you can see this week they all took a plunge. It looks like Credit Suisse, it took a deep nosedive by 30 to 40%, but it bounced back up, but it's still not where it was on March the 15th. It's still 10% lower than what it was from March the 15th. It says Credit Suisse and AG said it would borrow up to $50 billion from Swiss francs, equivalent to $53.7 billion, from the Swiss central bank to shore up its liquidity, capping a day in which the fears of health of global banks leapfrog to the Europe and North American, and the giant lender shares drop as much as 24%. The bank will also repurchase $3 billion worth of senior debt, whose value has plunged along the perceived health of banks on both sides of the Atlantic. This is where the banks make big money, because they're buying junk bonds per se, and then once it goes up, they're gonna make a killing. Y'all don't know, Bank of America made a killing back in 2008. They made a killing back in 2008 because they're doing stuff like this. They buy up a bunch of things or bonds that, or they put against themselves or short against themselves, and it's a sure thing. It's a sure thing. They got bailed out from the federal government, so I don't know if Bank of America got bailed out. I'm just saying, it's a sure thing that the stock is going to go back up, because we're talking about a major bank. It says investor confidence in Credit Suisse crumbled Wednesday, unleashing worries that the banking crisis center among the U.S. regional banks has spread across the Atlantic and poised to unleash a substantial damage to markets and the economy. Before the regulator's announcement, shares in the Swiss banks had slid 24% to a new low. Prices on the bonds fell to distressed levels, indicating investors were pricing the possibilities the banks could default. It says Credit Suisse U.S. listed shares jumped in the minutes after the announcement, closing 14% lower, then recovered some of those losses after the trading hours. And that's what we saw. That's what this is saying right here. So we saw that. It's nothing really more that I could say about these banks. I say, like, just tune in. We're going to report it as, we get it. Do you think, type in the chat, do you think the federal government should be bailing these banks out and these major corporations? What's the implications on that if they don't? What will happen if they don't, if the government don't step in and save them? What would happen? Do you think that people will lose their shirt if they can't get their money out the bank? Like I said, if you got more than $250,000 in the bank, I don't know what type of work you doing, but especially in one bank. I mean, I just can't think of why would you keep that much money unless you're just a cash machine. You got a lot of incomes and incoming receipts and outgoing receipts. That's the only thing I can think of. I mean, as a person. Now, as a company, yes. But as a person, why would you do that? But like I said, let me know what you think. Put it in the chat. I appreciate you guys. I know if you're tuning in, if you've been watching me before, we made it to 20,000 subscribers. So, and that's from you guys who's been supporting me. I know some of you guys been rocking with me from day one when I didn't know how to talk on YouTube. And I have some comments like, you read horrible. And I am college educated. So I really appreciate you guys. There's some things that I'm always trying to try something new out. I love talking about the news. I love talking about business. So I am starting a podcast, and it's going to be like a daily thing. I'm not for sure if I'm going to load it up on this channel or if I'm going to start a new channel for the podcast. But it's going to be about money. So, it's going to be about money. I'm not going to let you know the name of it yet because I don't want nobody to steal my idea. But it's going to be about money, and it's going to be a daily podcast. I'm going to have guests and stuff like that on here. And we're going to talk about money, and we're going to talk about money for you building your wealth in like bigger, bigger people or bigger names or bigger corporations. So that's in works, in development. So stay tuned for that. And I always appreciate every single last one of you. I really appreciate you.